Hi everybody, my name is Miro. Welcome back to the channel. In today's episode, we'll talk about how to position your portfolio for more predictable returns and also how to protect your portfolio. Over the last 3 years or so, during COVID and then 2022, your RSPs, your TFSA would have gone up and they would have gone down as markets sold off, and your 3-year return is most likely not very good. That's what the average Canadian investor has experienced. The last 3 years have not been very good in the markets. Well, as you're moving towards retirement, or at any time for that matter, you should be positioning your portfolio for more predictable returns. So on this first slide here, we have a security, and this is an actual security, private fixed income, that pension funds, major Canadian pension funds, major institutions, and the ultra wealthy have already exposure in their portfolios. Unfortunately, Canadian investors have very, very little exposure to private securities. And as you can see, during the same time period over the last 3 years, not only private fixed income has produced very predictable returns, even during COVID and then 2022, but over those 3 years, this particular security, this particular asset class has returned almost 30% positive. Now on the second slide, I know it's a busy slide, but I wanted to demonstrate visually the volatility that we have experienced in the public markets, but also give you a very good comparison to private securities. So same as on the previous slide, the purple line with the predictable returns are private securities, private fixed income over the last 3 years or so. And then we have the orange line, we have the blue line, the red and the green, which is public fixed income, bonds essentially. And you can see the volatility and also those negative returns that investors in public securities have experienced during COVID and then again in 2022. So if you could have exposure to private securities, why would you choose to take all that volatility that comes with public fixed income? Who understands this already? As I mentioned earlier, most Canadian institutions and pension funds, major Canadian pension funds, are already diversifying and including private securities in their portfolio. So on this slide, from the left to right, you have Ontario Teachers Pension Plan, which is almost 70% invested in private securities. Ontario Municipal Employees, about 62%. Then we have U.S. institutions, Harvard and Yale, two of the most famous universities. And then down the middle, CPP, Canada Pension Plan, about 50% of CPP portfolio is invested in private securities. Retail or Canadian investors, on the other hand, unfortunately very, very small exposure. Now the reason these institutions and these pension funds have been including private securities and shifting away from stocks and bonds over the last decade or so is, if you recall, in 08-09, CPP was actually underfunded right after the correction. In 08-09, markets were down about 40% or so. So the CPP, market value of CPP, was actually not sufficient to provide benefits to all the retirees, since markets pulled back about 40%. So CPP itself, for over the last decade, more than a decade actually, has been repositioning their portfolio and shifting part of that portfolio to private securities. And currently, CPP is about half stocks and bonds, publicly traded, and the other half is privately traded securities and alternative investments. There are many different categories in the private space, but the three main asset classes that I want to discuss today that you should consider for your portfolios is private fixed income, which essentially are private mortgages backed by and over-collateralized by real estate, which I already briefly discussed initially. Then we have private equity. Private equity invests in private companies and private businesses versus public companies. There are about 10,000 major public companies trading on stock exchanges in North America. And then you have millions of investors competing for these companies, bidding prices up and then selling in panic. That's why you get all that volatility. And at the same time, we have over 500,000 private companies. A lot of them are very profitable. A lot of them are priced much more reasonably than public companies. And very few Canadian investors have any exposure in their RSP or TFSA or in their portfolios to any private equity at all. The last category I wanted to briefly discuss is private real estate, multifamily housing, essentially apartment buildings. The wealthy, the ultra wealthy, have been investing in private real estate for the last several decades. As I said earlier, Canadian institution pension funds, same thing. Canadian investors are left out. No exposure in RSPs, TFSA, and this is a great asset class to have exposure to, because multifamily housing has not returned a negative return in the last 30 years. Actually, the average return has been about 10%. Worst year was 08-09, about 2, as you can see on this slide here. But better yet, because of demographics, this asset class should continue to deliver predictable returns in the near future, because there's 500,000 immigrants moving to Canada. There's not enough places to live. Rents are going through the roof. So this is an asset class we're really excited about. And the biggest question is, why do you not have exposure to this asset class in your own RSP or in your RIF or in your TFSA? The reason most Canadians have no exposure to private securities in their RSPs, in their TFSAs, or in their portfolios is that most Canadians are actually dealing with a bank or their bank. And as we know, banks, their most profitable products are mutual funds and GICs. The other reason is that most advisors are not licensed. They do not have the licensing that is required to provide private securities to their clients. So if your advisor does not mention private securities to you, you should be looking up an independent advisor who is knowledgeable and who could potentially help you to get some exposure to private securities in your portfolio. Thanks again for tuning in today. Hopefully I was able to provide some value, and if you like the channel, please subscribe to the channel. Please do like the channel. Send me an email if there are any questions, or if you have any ideas for future videos. We'll be posting on a weekly basis. Thanks again, and have a fantastic day.